I remember when I got into real estate several years ago, the government had phased out those zero down mortgages. Is
Right.
that something that's still on the table? Um, like, although not maybe as readily available as it was when I took advantage of it, is that something that, under the right circumstances, somebody might be able to utilize? And if so, what are those circumstances?
Yeah, and that's a great point. With zero down mortgage, it's funny you say that because my first mortgage was a zero down mortgage too. I
Welcome to
remember
the club.
my
Welcome to the club.
my Mission 35 house, the one that I sold to
Yeah.
pay off my house. Like I sold, like I'm an investor as well too, and I sold a house to pay off the house I live in. It started as a zero down mortgage at 6.75%. It's a zero down at 675. And the house, I bought it for 165,000 back then and ended up
Wow.
selling it for 475,000. So I just say that because, and then that equity was enough to pay off my house, but after 10 years, of course. But when it comes down to zero down today, they're not readily available, right? It is much more difficult today. However, there are certain lenders that will allow you to use the borrowing from an unsecured source to use that as a down payment for your house.
Okay.
Okay.
Can you
So
elaborate before we go any further on what an unsecured source is?
yeah, you got it. So let's say you have a line of credit, or a line of credit's like a really big Visa card with a big limit with a relatively lower rate. Okay.
Okay.
So if you were able to qualify for a line of credit at a bank for say 20, 25, $30,000, okay, which is not the easiest feat in itself,
No.
right? Because you reminded me of what we say about banks. Like they'll give you an umbrella when it's not raining. And then when it starts raining, they'll say, "Give me that umbrella back. We need that now."
Absolutely.
It's kind of
Absolutely.
like credit with them. And anyways, I digress. But what the banks will say is if you incorporate, and this is not all banks and all lenders, but we have some niche lenders that will say is, okay, if that payment on that $30,000 unsecured line of credit is $300 a month, if your ratios or affordability necessitates that you can afford that payment, they will allow you to borrow that down payment included in all of your monthly payments in order to qualify for it. So like when I talk about those payments there, so I'll give a numbers example, just
Okay.
because they'll be a little more concrete. If you bought a house for 500,000, 5% down be 25,000. Okay.
Yeah.
So let's say on 500, if 500 minus the 25, you'd have a mortgage of 475 plus your CMHC premium. Let's say that payment is going to equate to $2,000 a month for simple math. Okay.
Okay.
If you borrowed the $25,000 from that line of credit I was talking about, and if that payment was say $300 a month, you would be paying the mortgage for $2,000 and the line of credit where you borrowed it from 300. So you'd be borrowing 100% of the value, but you would have two payments that you're paying to do it.
Okay.
Does
There we
that make
go.
sense?
Yeah.
Yeah.
100%.
And on that point too, like just because I find like one of my favorite quotes is that there's never a lack of resources, there's only a lack of resourcefulness. Okay.
I
And I believe that when it comes down to if you say no with a bank, what we're seeing more and more and more of is co-investing, right? And I think for young first-time home buyers who hear a lot of no's and the zero down won't work, and maybe I don't have a lot of assets, right? Is can you save up, a little bit of money and do it with four of your friends? And the answer is yes, you can, right? Four of you could get together and all pitch in five, six, $7,000, right? And do it. Or what we're also seeing a lot of, I've got a young daughter, she's 4 years old. Nothing I would love to do more is invest with my daughter, right? So I think instead of mom and dad co-signing right now, we actually teach a lot of, first-time home buyers who've heard a lot of no's, put a business plan together
yeah.
and get mom and dad to buy the house with you. And maybe it's a 5-year plan. And maybe mom and dad are now business partners with you. And maybe you sell that house after 5 years, split the equity and say, see you later, mom and dad. Now I got my money and you got yours. And we both made some money here.